So many people ask if they should create spousal partnership, meaning LLCs. They will go and create a bunch of LLCs between husband and spouse, and it might have a lot of tax compliance issues that they are not aware of, and that's what we're going to talk about today. I'm Ashish with Investor Friendly CPA. We do a lot of these videos, so if you are interested in learning more, please join us on all the platforms we got, okay? So I'll share one more thing before jumping into that topic. You will see there's another video on YouTube, I'll put a link here, that talks about what is a single member LLC, what is the multi-member, S corporation, C corporation, how they're taxed. There's another video. Right now I'm just focusing on this single member and multi-member. When you get an LLC, it can be single member, meaning only one owner owns it, or it can be multi-member, meaning more than two owner owns it, or member owns it, right? So what you need to understand, what happens when you have LLC between normal people, meaning non-spousal partners, and spousal partnerships, meaning husband and spouse, and household LLC and non-household LLC, let's say. But before you understand that, everyone to understand this. LLC is not what determines your tax filing obligation as a partnership. As soon as two people get together, they shake hand and open up a business, it's a partnership. Meaning, let's say you want to shake hand with your neighbor and open up a food truck in your neighborhood. You don't need LLC or any kind of legal entities. As soon as you go and do a business together, it becomes a partnership. This is also true for if you buy a rental property. Things like that, okay? So, what I'm trying to avoid here, so people can avoid this big mistake, is what happens in a spousal partnership. This is what I want to talk about. If you are, just creating a partnership, shaking hand and opening up another partner, it's okay to go and get a multi-member LLC because it just protects you from legal protection. So it gives you legal protection. LLC is not what creates a tax filing obligation. It just protects you. But what happens in a spousal relationship is this. As soon as you shake hand and open up a business with your spouse, you don't have to file a partnership tax return. There's something called qualified joint venture. You can make that election and you can avoid filing a partnership tax return, which can cost you, let's say, $2,000 that we charge at the minimum, okay? If you have multiple LLCs with your spouse, it can cost you multiple $2,000, especially in non-community states, okay? So what I want you to understand is this. If you are gonna get an LLC, make it a single member LLC. In our tax planning, we do go through, okay, even though you and your spouse wants to get involved, we give you a structure where you can have a trust on the top, and then it also a holding company, so it becomes a single member. I'm not going to go through that right now. All I want you to understand is this. If you have a spousal business, either make the LLC a single member LLC or don't even get an LLC. As soon as you get an LLC, what happens is you will have a partnership tax filing obligation and it costs you money without saving any taxes. LLC does not save any taxes most of the time, okay? So, non-spousal partnership, you shake hand, it's okay to get an LLC. You're always going to have to file a partnership tax return anyway. However, if you open up a business with your spouse, avoid getting a multi-member LLC. It's okay to get a single member LLC, but avoid getting multi-member LLC. Even though both the spouse wants to get involved in the business, talk to an advisor. They will give you a structure where both of you can get involved without having a multi-member LLC structure, okay? But go watch this video, the top one first. We'll give you a link and then try to understand this. Now, this is what I wanted to understand. This one, let me show you this article here, okay? This is what I was talking about. Qualified joint venture for married business owner. If you are married, as soon as two people come together, it becomes a partnership. You have to file a partnership tax return. Okay, that's what it says. Generally, unincorporated business jointly owned by married couple is a partnership. You have to actually file a partnership tax return. However, if you make a qualified joint venture election when you file a tax return, then you don't have to. But look at this, what it says. The business must be co-owned by a married couple. No others are allowed to make this election and can be held under the name of the state law entity such as partnerships and LLCs. So what I'm saying, as soon as you get an LLC or you sign a partnership agreement saying this is a partnership, you cannot make this election and you have to file a tax return. Okay, so the bottom line is this, complicated. Before making any kind of LLCs and moving properties or assets and running a business, talk to your CPAs because they will help you understand this. Okay, most of them they will. So please talk to them before getting any entities. Okay, this is all for today. We'll have more content. Please join us and follow our platform so you can get more knowledge. Thank you.